Here at your Net Worth Manager, a frequently asked question is, should I make an RRSP contribution or use a TFSA? Let's look at some examples to explore when it's worth using RRSPs, and then our next video will be comparing RRSPs and TFSAs. Firstly, an RRSP is a tax deferral tool, saving tax now to be paid later. Let's take 3 different situations. Number 1, your tax rate is the same when you make a contribution and when you're retired. Number 2, your tax rate is high when you contribute but lower when you're retired. Number 3, you are low income now and as a retiree. Let's assume you contribute $1,000 to your RRSP, it doubles in value by retirement, and then you take it out all in one go. Scenario 1, your tax rate is average 30% and doesn't change between now and retirement. Your $1,000 RRSP contribution will generate $300 in tax savings and doubles to $2,000 for retirement, and then you take it out, at which point, remember, it is subject to tax, so you lose 30% or $600, which leaves you with $1,400. Scenario 2, your tax rate is higher now, 40%, and you expect it to be lower, maybe 25% when retired. Your $1,000 RRSP contribution will generate $400 in tax savings up front and again double to $2,000. In retirement, you lose 25% or $500 in tax. That leaves you with $1,500 to spend. And now the last scenario. If you are a low-income Canadian and qualify for the Guaranteed Income Supplement, usually under $34,000 for couples. GIS is income tested, which means that the higher your income, the lower your benefit will be. In this case, every dollar of income lowers your benefit by 50 cents. That's a 50% tax. Let's say your tax rate is 20% now, and in retirement, your $1,000 RRSP contribution generates $200 in tax savings, doubles to $2,000 by retirement, and you pay $400 upon withdrawal, plus you lose 50 cents of GIS for each dollar of withdrawal. That's $1,000, only $600 to spend. So, if we do a side-by-side comparison of our 3 scenarios, in Scenario 1, you save $300 in taxes up front and ultimately have $1,400 to spend. In Scenario 2, you save $400 in tax savings up front and you have $1,500 to spend later. In Scenario 3, you see $200 in tax up front and have only $600. We can see RRSPs are more beneficial if you are a higher tax rate now than you expect to be when you use the RRSP. We should also think about how RRSPs are taxed on death, especially if you have no spouse to leave it to. Thanks for watching. My next video will be, should I TFSA or RRSP? Visit my blog, www.yournwm.ca/blog, and news articles and videos on my Listly pages, list.ly/Kathy Waite.